Welcome back. Hope you're having a good morning. Well, as promised, we're going to get some fundamental analysis going. Dharmesh Kant, Head of Research at Chola Securities, joins us on the show. Hi, Dharmesh. Good morning. Good to see you in. The tech results start rolling in today. But over the weekend, we got a result coming in from DMart, Avenue Supermarkets. And actually, the update that they put out was a little bit weak. But the results are not too bad. And I'm just going through a Jeffrey's note. They say that the EBITDA margins have come in at the highest they've seen in the last 6 quarters. Some kind of relief, at least on that front. What's your view on the stock from here on? It's corrected substantially from the top. It's been under big pressure. But now it appears, at least in the profitability aspect, there's a bit of a beat.
Yeah, good morning, Nigel. Thanks for having me for the show. Definitely, results were a bit better than what the expectation was going by the updates on the revenue which they have given. And they have also added 10 new stores, so that also, will suit well with the trading community. But to my mind, still, the Avenue Supermarts is not a structural wealth creation kind of a buying value. You can get a trading gains if somebody is buying here, 10-15% kind of a pop-up may still happen over a few months. But what I think is this is the best they can do going forward. So 24-25% kind of a PAT growth, 8.5% kind of an operating margin is the best in light of the competition which has been hitting up. And stock is still valued at around 75 to 80 times PE multiple basis even 1 year forward. So such kind of a valuation multiples with 20 to 25% kind of a shaky growth is hard to sustain going forward. So trading play is on, but if somebody is looking for a fresh entry for a wealth creation kind of a concept for 2 or 3 years holding, to that the answer is avoid.
Point taken. Dharmesh, hi, morning. This lemon tree news, the information coming through, and by the way, we had reported on this just 3 days back. So in that sense, it's a confirmation of our story. But what did you make of it? Any thoughts?
Yeah, good morning, Prashant. We haven't figured out the valuation part as far as that is concerned. More details are awaited, and there we will work on the numbers as to how it goes through. But structurally, entire travel and tourism industry is on an upswing, and we have seen the discretionary spends are getting invested there. And then if you are buying a lemon tree hotel as of now, so investors have a choice of retaining either of the two businesses. One is the asset light model on the servicing part, and the second one is the Fleur is a pure play on the asset ownership. So, it will make sense if somebody gets into for trading play for some time, and thereafter, when the further details emerges and the valuation can be ascertained, one can hold whichever one likes. Structurally, for next 3 to 5 years, this entire space is looking very good, and Indian hotels we have been recommending for quite some time to be added into the portfolios.
Value unlocking for Lemon Tree with this restructuring in a way. We'll wait by to see how the stock reacts. Dharmesh, any commodity plays that you're recommending at this juncture? Because across the board, stocks have run up. So from here on, any stock where the risk reward still looks attractive?
Yeah, good morning. Definitely, yes. Commodity is a structural theme in the making, and I think this year again, 2026 would be good for all the commodity players who are the producers of them. And dollar index is also helping them. It is not much is happening out there. It's benign. At the same time, interest rates cuts are expected from across the board. So recent development in the US may even speed up the interest rate cut. So there we have been liking Hindalco for quite some time. Though valuations are now reeling the +1 standard deviation kind of a zone, but still I think a lot of juice out there. And Vedanta is the second one in play. Both benefits from aluminum, copper, price upswing which is happening in the international market. At the same time, Vedanta also have a similar pace. They have not mined yet to that extent from the Hindustan Zinc for 2 quarters, but maybe going into the fourth and subsequent quarters, this output increases, so that will be a value accretive. And for the ferrous play, JSW Steel is one which we have been liking for quite some time. And also in light of safeguard duty which has been levied, again an elbow room has been created for them to speed up. So though higher, volatility will be there, but structurally if you're buying it for a 1 year perspective, I think plenty of upside is still left.